European markets are lower as Geithner warns against draconian austerity. U.S. futures on the decline as markets are extended for most major moving averages. Eyes will also be on earnings from Oracle and Tiffany. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the morning call. So, Scott, yesterday the S&P extended its rally, declined within 10% of its record high. A lot of that was, of course, on Apple's announcement of a share buyback plan and an annual dividend. But now we're seeing futures retreating a little bit. Is what we're seeing normal?
I think it's very normal. I think that we've been extended from our moving averages. I think we've had very constructive action. The rotation has been great. I think just the bulls are a little bit spoiled. So you want to shake things up. You want to let some more people in. If you take a quick look at just the spiders, I'll use that as a vehicle because I know a lot of guys trade that. Look at these trends here. Starting back from October, you've had this gradual trend that pretty much got tested or somewhat tested back in late February, and it held right here. And then we bounced right well into resistance and then broke out above these highs here. And now I've been following somewhat of an ascending channel to the upside. So sometimes ascending channels to the upside break to the downside just for a little corrective type action. So what I'm going to watch here, because I've been using the spiders as a hedge and I'm short it, if it doesn't hold this level here of about 140.11, I do think this 10-day moving average could be tested, and I'm going to have a zone of about 138.45 to about 139.45 where I can cover some of my hedges and look to buy some of the best stocks out there. So I do think that this move down is digestion. I think it's normal, and I think it's constructive.
Now, analysts have said that a flow of retail investor money could fuel the next leg of this rally. Do you think we'll see volume pick up now that cash on the sidelines has missed some of these exciting moves?
I would like to see volume pick up, but the new normal the past few years has been light volume. It's just been another excuse for people to stay out of the market, for people to keep fighting the market. I'd love to see more retail get involved, and I think retail has been involved because there are a lot of retail guys that actually watch this, that have been involved in the market, that are trying to educate themselves, and they're not just going to chase and buy at the top or get capitulated down at the bottom. So I do think it's a little different type of market right now.
Well, yesterday we saw a continued spike in Treasury yields, TBT, of course, the winner over TLT. Do Treasuries find a new range here, or do they continue to run?
I think they do find a new range. We talked about last week how you could be long the TBT and short the TLT. A lot of people have been trying in this trade. It triggered last Tuesday. If you look at the chart of the TBT, you could see once it closed above this 1970, we were talking about it. That's when I went long the TBT. Since then, you've had a nice methodical move to the upside. I still think there's more room to run. On a short term, there is some resistance. We talked about 21.5 to 22, but if you go to the weekly chart of the TBT and you see where they came from, you could see a move if the economy continues to show some strength. You could see at least this 26 area, and then if we continue higher this year, there's no reason why I can't see 29. So I do think that this is the first move in the TBT on what could be a longer term move, but you got to take trades along the way. I'm in tier 1, I've been in tier 2 and tier 3, but right now I'm just going to let it run its course a little bit.
Well, oil stocks perked up on Friday and are at 2-week highs. And do you think we add more to oil here, or do we look at another commodity or material to play off of a weaker dollar?
I think the rotation's been there. You saw some energy go back into the OAHs, I think last Friday in some of the refiners. If you look at the chart of oil itself, I talked about getting long a little bit here. This was the last descending channel that oil was in before it broke to the upside and extended. Here I see a very similar pattern. So I got involved right around here, and I'm still long some oil. I know it's down a little bit this morning. I think as long as it holds above 40.70, oil and the USO will remain strong. And then if it holds there, it can continue. That'll be my stop on oil for that trade right there.
And do climbing oil prices have the potential to kill the rally that we've been seeing?
Well, right now, oil has been positively correlated to the markets. Ever since like the 2009 bottom, oil and the market goes up together. Higher oil prices meant, better economic news, meant people have demand for the cars and for their energy because they're just on the move and consumption. So we've seen them together. We haven't seen where it's been, oil up, market down. It's really been oil up, market up. So until we see maybe a move above 110 to about 115, 118, then maybe they diverge, and then that'll be a relationship that traders look at for potential change.
Of course, we did see the financials rise yesterday, buoyed by home builder sentiment remaining at its highest levels in nearly 5 years. Of course, we have a steepening yield curve, but you're not so hot on the financials right now. What's your plan with them?
Well, I just think that you need to trade the moves, both long and short, and I've been trying to be long the financials. First things first, we talked about the financials going into January as a January effect type play. And then, it just impressed everyone where I said it's more to that. Last week, we were focused on the financials going higher after Fed Day on Tuesday. JP Morgan, all of them had a huge run. So yesterday, I said, you know what, I'm going to short the financials. So I'm going to short the FAS, and I'm going to short or by going long the FAZ just for a Q trade, just for like a 2 to 3 day trade, because you can do that as a trader. You can make money both ways without calling a top. And if you look here at the FAS, you will see that it's been very extended from this prior breakout. It's very extended from the moving averages. So I shorted a little bit here yesterday afternoon around 112. I think we're opening around 108. I'd like to cover anywhere around 106, 107, and that'll be my cash flow trade. For the FAZ, I think you get a similar trade. I bought it yesterday around 2035. I tweeted about it. I tried to tell some people, if you're long multiple positions, get a little Q trade here. And I think that this could also get probably back up to about 22 before it hits some resistance. And that would be my little Q trade there to short this group. But I'd rather buy the individual names. So I'll take the Q short off and look at some of the leaders.
Okay, so speaking of the leaders within the sector, what about JP Morgan, which of course has been a leader in the sector?
JP Morgan's had an unbelievable run. I sold it actually early. It wasn't even my focus last week. I focused on a few others, but I'd like to buy JP Morgan on the dip. So if you look here at the chart, this is the nice extended move all the way through this last buyable point, and then it extended higher. So right now, what I'd like to see is I'd like to see a pullback. If you look here at this point, you have 42.93, which would be an area that if you did look for a cute short, which I didn't short JP Morgan, that would be your area to cover. But I think anywhere between like 42.50 and 43, this would be a spot to buy a little bit. And if the pullback gets a little bit more deep or deeper than I think, here's a 20-day, and that's around 41.55. So here's support 1, support 2. Put it on paper and pen, or put your pen to paper, write that down, because I think that's viable.
Now, just like JP Morgan, Goldman Sachs is about 35% up year to date. Now, news came out last night that the bank has begun its latest round of job cuts. I'm wondering if this is the same old trimming of the fat, or if this news could weigh down the stock today. So what's your game plan with Goldman Sachs? I
think people thought that their business was getting a little bit better, so this is a little bit of a surprise. I tried to be long Goldman Sachs yesterday. I bought it above 124.50. Thought it could hold 125, and when it traded back below it, that was actually one of my signals to get out of my long in Goldman and go short some of the indices for the banks. So right now I'm just going to avoid Goldman. If you take a quick look at the chart, you will see you had a few different type of moves. This is when it tried to break out. Here was that 3-day inside range. So this has been a little choppy here, and just really more of a trade or a longer term hold at this point. I'm going to let it just sift out.
All right. Well, Bank of America, it was on pace for its 5th straight rally yesterday, but the stock retreated after the company denied rumors that it has plans to issue shares. I'm wondering if, because this news was enough to rock the stock, does it make it seem just too volatile to be in?
No, not at all. I just think that you had two different patterns here, two different strategies. First, coming into the new year, it was a great strategy to be long for a bounce, and then obviously it got stronger, more potent, so it showed you could stay with it. Last week, we talked about that sideways channel to buy it above 825. So if you look here, this was that last pattern. One here, it goes across after a big move from the lows. Here was your digestion. So once it cleared this is when I got to my tier 2, tier 3. So it shows you I could use a tier system. Then I pieced out a little bit here, a little bit here. Sold the last early on Friday. And look at yesterday. Red dog reversal, trade through highs, come back below. If you've been trailing it since this breakout, that's your sell signal. So I do think Bank of America will be buyable, but look how far it is away from this 10-day moving average. So I would say if you did sell into that strength, or you sold on that reversal pattern, maybe somewhere between 875 and 910 is your buyable spot. If you shorted it yesterday, here's your spot to cover.
All right, well, that's the financials, but coming up, we're going to talk high beta tech and how to play it, so stay with us right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
And we're back. We're talking high beta tech, so obviously we have to start with Apple announcing a share buyback plan yesterday, an annual dividend. The stock closed above 600, of course, closing at all-time highs again. Where might we see some resistance here?
I like to see the enthusiasm because a lot of people are making a lot of money in Apple, and too many people wanted to call a top in Apple yesterday, and I think if they announced a one-time dividend, maybe they could have sold it off easily, but they declared a dividend. It's going to be paid consistently. They have a buyback in there, so I think Apple still gives you growth. It still gives you now a dividend, so it opens up the doors for other investors. So I think that yesterday was not the highs of the year. I just think maybe it could pause. So if you look here at the chart, you will see that the stock has had a huge move this year. This was the earnings. Remember, the earnings came out. I talked about buying it afterwards if it didn't fill the gap. Well, it didn't. And from this entry, which was a low-risk entry, okay, you saw almost 150 points. And now we're knocking on the door of 600. It was as high as 604 last night, so with the futures, it's down a little bit. I am long a little bit. I think if it gets back above 601.77 today, you can get it for a trade to extend as an investor. Stay the course. Maybe you trim some if you're in tier 2 or tier 3, but as a trader, pick your spots. You're making a lot more money buying the dip than looking for that cute little short that lasts for about 15 to 20 minutes tops lately.
Now, when it comes to Amazon, I know you're not necessarily a fan of this one right now. Yesterday, we saw the company make an announcement to buy Kiva Systems for $775 million. Wondering if this is going to be enough to lift the stock today.
You know what? I think it's down a little bit, so I don't know if they actually like the merger. We'll see how it reacts today. But overall, this pattern has been lagging the market. The stock has not acted well. The stock's been on a pause while the market's been on a tear. So that tells me right now it might be ripe for some kind of fall. So if you look here at the chart of Amazon, I'm not going to have such opinions there. I'm going to wait for the market to confirm it. But if you look from the highs, all the way down to this lower area, it's just showing relative weakness. So it's been trying to, poke its head above this little area where I guess for a Q trade above 187, perhaps it tries to test the 190 area, but overall, to me, it looks like it's going to be heading lower. I know it has a high PE, high valuation, so if it were to break below 170 to 175, I could see this stock hitting 120 this year, so I'm on alert to be shorting this thing. Unfortunately, it might happen with the next quarter earnings, so at that particular point, I might take some puts, but I'll wait till then.
All right, and I know you've been watching Baidu to break out. Yesterday, we hear the company signed a multi-year subscription deal with Digital Globe to better compete with Google. So wondering if this will be enough to propel the stock.
I hope so, because this has been one frustrating stock. I think last week I talked about buying it through 140, and it didn't work. I lost money, but I didn't get frustrated. I said, you know what, it might not be ready. So that's like the whole thing with the trader. So you try something, but it's not ready. You take accountability, you get away from it, and you could always try it again. I lost money that day. Maybe it's ready. You look at the chart here, and you have this downtrend that it's just been trapped in. Here's your high, lower high, lower high, lower high, this whole trend here. But it's been holding in there. And I know it's not showing relative strength, which is what I like to see, but we'll see what happens here. I think if it goes positive today and a negative tape and starts clearing 139.20, I'll nibble on it. If it starts getting above 140 and could stay above it for about 60 minutes, I think we can get that trade. So Baidu is on my radar for cash flow today, and as an investor, if you're still in it, maybe you get to a tier 2 if it can clear above 140 and close above it.
Now, up and down Wall Street, investors are, of course, talking about Apple's decision to issue a dividend, and if that will put pressure on other companies to do the same. And the name that comes up the most when you hear this is Google. So wondering what effect we'll see on Google today after Apple's news yesterday.
I think that Apple and Google have kind of been separated because Apple's been on its path going parabolic, where Google has been trying to repair its image ever since the last quarter, and it's trying to get some shareholder support. Now, we've talked about how to trade different time frames in Google. Everyone thought, oh, Redler, your play of the year is in the doghouse. I'm like, you know what? It's not even the end of the first quarter. Give it some time. You could have actually more time to accumulate it if you're a macro investor. Yes, we didn't get immediate gratification. Who cares? You look at the chart right now, this is what we talked about. Here is where we reported earnings last quarter. It went into the penalty box. It hit the prior support. This was a 200-day. We talked about getting more shares here if you're a macro investor. And if you take stock into earnings, you are a macro investor because you're taking the risk on. So if you bought more here, great. Here is your trade once it went into the gap. Nice little 2-day trade. And since then, it's been in this channel where it's been very choppy. It's been hard to trade, and I'll admit it. I've been pretty much backing off because it's been out of my wheelhouse. And then yesterday, it finally broke through above this 625 and extended. I would say as long as it now stays above 625, it could move. As an investor, I think this high right here is not the high of the year. Stay the course. And as a trader, pick and choose your spots, but there is slippage there, so it's not that easy to deal with. So know if you can handle a 600 plus stock to trade.
All right, well, speaking of picking and choosing your spots, you bought some Netflix on Friday. You added to your position yesterday. A lot of naysayers about this company, of course. I know you're not necessarily a believer in the company, but you're a believer in the charts.
Yes.
So does the chart tell you about Netflix?
That's such a difference there. Without being a believer in the company, you can believe in the charts, because the charts is movement and they lack opinions. And I tell you, my Netflix, I hate it on my iPad. It's so hard to get from time to time. But anyway, as a trade this year, it's been awesome. If you look back at the chart, you will see that you had a lot of different tradable patterns. Right here is when it ignited above 75, gave you a move to the upside, putting it on the map. I was on Bloomberg talking about how it can go to 110. It almost went to 135. Here was your little reversal pattern. Remember that red dog reversal? That was a change of direction after a big move. Since then, descending channel to the downside. So this is the reason why I got involved when it started to poke its head up, when it started to go sideways and change its composure. Yesterday, I added above 111.50. It closed pretty strong with the high of yesterday, 115. Today, it's probably down at the futures. I'll see if it can go positive, maybe add to it, because I went home only in tier 1. So if it can go positive and trade through 115, I'll look for another cash flow trade. And the next resistance here is 117.84, and then it could also continue higher. So watch Netflix for a cash flow trade today if you see some relative strength versus the futures.
All right, and really quickly, time for some just real quick hits. We saw Zynga perk up a bit yesterday. Where do you see it going today?
I just wanted to hold in there. It sold off in the secondary news. I bought some yesterday around 13. I'm going to try and stay with it. I think it has higher prices into Facebook, but get that announcement out of the way. I'm not going to get big until I finally see the news, but I did buy back yesterday.
All right, in terms of the casinos, Win is, of course, up 17% this year. You're in LVS. What could tempt you enough to get into Win?
I've just been choosing LVS. It's easier for me to trade. And as a trader, you need to know your strengths. And for me, Win has been a little looser. I think Win has higher prices this year, but it just had a major move. We talked about buying it down below 120 on that retest, and now it's back at 130. With a little bit more risk, I think it clears 132, but it might need to settle in a little bit for a few days.
And game plan for MasterCard today?
MasterCard actually looks good. I'm going to put it on the chart. It's been resting. It's been consolidating with Visa. It's been one of the strongest stocks that perked up yesterday. I think that if it can go positive, it could trade through these highs here. If you're an investor in MasterCard, awesome job. If you're a trader, if it gets through 428.10, you could see some cash flow today and some momentum.
And Exxon is only up 2% this year, while, of course, oil prices are up about 18%. Wondering what's the breakout level for this stock?
This stock has been consolidating now for a few months here, and everyone's scratching their head, but don't scratch your head. It just has to absorb a big move. If you look here at the chart of Exxon, people say it doesn't trade with charts. I say you're out of your mind. Look what happened when it broke above this resistance the last time. Big move, then consolidated again, and now look at the size of this channel here. So this is absorbing a huge move from last August, September, October. So I would say above this, what is this, about 87, 88 area, you can get some momentum to the upside, and this will help the market. Yesterday was a day to get back into it. Above 87, 88 with the close will add some momentum, and I think that'll be pretty impressive.
And lastly, we talked about oil before, but can money be rotated into this sector?
I think so. I think that as long as oil itself stays above like 106, 107, you're going to see some continued buying in the OAHs. The refiners perked up Friday. I got back involved. If you want to take a quick look here, you know, it's easier to buy the dip in the refiners just because they don't have that much momentum lately. So I'd say as long as the OAHs stay above these moving averages and stays, you know, stays above around 43, I think ultimately it'll get above this recent pivot of 44 and test these prior highs.
All right, great, Scott. So what's your theme of the day, your strategy?
Theme of the day is to see how we handle today's open. You know, do we open up 7, 8 handles and then within the first 16 minutes go positive? Do we open up, down, 7, 8, up, down? Do we open down 7, 8 handles and we can't fill the gap? We go sideways and we see continued weakness in the bank, so that means we potentially could retrace even more. So then maybe clean up some excess risk and then put together that plan to know where the 10 and 20-day moving averages are and see what holds at each one so you can know which one's acting better moving forward.
All right, good plan. Thanks so much, Scott. Happy trading, everyone. Have a great day.